Securing finances to purchase a home. Today's video, we're going to talk about the most common loan types that you can have as a borrower. And I'm going to tell you about two specialty loan. So jumping right in, conventional loan. So conventional loan is a loan that is not backed by the federal government. So with this loan type, you have to have a pretty good credit score and you have to have strong income stability. So the credit score you want to have is around a 620. That is going to be a sweet spot for the conventional loan. Now, the conventional loan, they want you to put down anywhere between 3 to 5% on the actual down payment. Now, with the down payment, if you are going to be able to put down 20%, you are going to be able to take away what is called the private mortgage insurance. If you don't have that 20%, that private mortgage insurance is going to be on your loan until you build 20% equity into your home, and then it would come off. There is an additional cost to have the private mortgage insurance on your home is about 1.5%. Now, the purpose of this private mortgage insurance is in case a borrower defaults, it's like having any other insurance. There is some kind of recoupment that the lender can have if the borrower decides or happens to default on the loan. Okay, so moving on. Also, before we move on, with the conventional loan, just like any other loan, you will have closing costs. Closing costs is also 3% of the loan or somewhere around that, right? So the next loan is the FHA loan, Federal Housing Administration loan. Now, this loan is backed by the federal government, so it gives a little cushion for lenders when they choose to utilize this loan. Now, with this loan, you can have a little bit more debt and your credit score. It doesn't have to be as great as a conventional. So, if you have a 580 credit score, this would be the sweet spot for an FHA loan. With an FHA loan, they have what is called mortgage insurance premium. Now, this is going to be on for the life of the loan. So, unlike the conventional loan with the private mortgage insurance, once you hit that 20% equity, it kind of goes away. With the FHA, it's on for the life of the loan. You would have to refinance out of the FHA into the conventional loan to be able to get rid of that. Now, with the FHA loan, this is a loan that is a owner occupied loan only. So if you are an investor and you're looking to invest in a property and maybe put in a renter, this is not the loan for that. You would need to be able to live in the home within 60 days of closing. So that is a policy for the FHA loan. Okay. So moving on to a VA loan. So this is the veterans loan or the loan for veterans or active servicemen and women or their surviving spouses. Now, with this loan, it is a great loan because you don't have a down payment. Now, you will have to have your certificate of eligibility so that way the lender can know what your eligibility is and factor that in so they can give you a pre approval amount. And you also want to have your DD 214 handy. Now, with this loan, there's no private mortgage insurance as well. All right, so now moving on to the USDA loan. Now, honestly, I don't see this a whole lot in the Atlanta area because it has certain stipulations that has to be met. For example, you have to have a population or the home has to be in a population that has 35,000 people or less. Most areas in the Atlanta area easily has over that number. So where you're buying the property, your household income has to be 115% of the medium income of that particular area. So again, I don't see it used a lot in the Atlanta area, but if you want to go onto the outskirts of the greater Atlanta area, that's where I see it being used mostly. Also, with the USDA loan, it's usually a smaller footprint of a home. So you're looking for a home with like 2,000 square feet. And so, again, these types of loan products are usually on the outskirts of the greater Atlanta area. All right, moving on to our specialty loan. we have the jumbo loan. So the jumbo loan is basically a conventional loan that has a extra layer to it. And so with the jumbo loan, you definitely have to have 20% down to be able to put down on the actual down payment of the home. You have to be able to pay closing costs. They want you to have a lot of assets in reserve in your bank account just so that they know that you can pay subsequent payments on the mortgage. Okay. This is a loan that's typically used in our luxury markets of $1 million and up. The other specialty loan is called a bridge loan. Now, this is for my folks that are relocating. You already own a home in another state. You need to move quickly, or there's a home that is your dream home that has came available and you don't want to lose out. And so this bridge loan is a short-term financial option. Basically, you have to have 20% equity built in your current home. They're going to use that to bridge you over so that way you can get that new home. Now, here's the thing. You want to make sure that you know the market that your home is currently in so you understand the time frame that your home could potentially be sold to be able to use this bridge loan to make it make sense because this bridge loan is only a short-term loan option, which is 6 to 12 months. So you definitely want to make sure that you can sell the current home. But again, this could be a great option for those who currently own a home, who's trying to move into the Atlanta area to purchase a home and need the funds from the sale of their current home to do so. This option will be able to bridge you over. Okay. Now, these are the most common loan types and also two specialty loans. If you're ready to get started, I have wonderful lending partners that I can partner you with so that way you can get pre approved so we can get started on the home buying process. All right. Until the next video. Bye.